All right, so the next step is the accounting cycle, right? We just finished step 7, which is completing the adjusted trial balance. Now we're doing step 8, which is to complete the financial statements. For your financial statements, all you need is your adjusted trial balance, okay? Because this is going to give you a lot of the information that you need to put into your financial statements. Other things that you will also be needing is your unadjusted trial balance for for some certain areas of the financial worksheets, okay? Just because when we're looking at non-cash transactions, which we'll talk about in the statement of cash flows, that's where you're going to be needing the unadjusted trial balance, because we need to know what the market value of your fixed assets are when you purchase them, the historical cost, right? So for all you really need for this is just your adjusted trial balance. So it's very important that this does pan out evenly, because again, every step that you do is a continuation. If you got this wrong, you cannot go ahead and move on forth to the next section, okay? So that's why it's very, very important, right? All these steps of the accounting cycle go in order, okay? So in this case, right, let's go ahead and work on our very first financial statement, which is going to be our income statement, okay? So first off, for the income statement, right, how do we create the income statement? Well, first off, the income statement is going to test profitability, right? We're seeing if our total generated income covered over all of the costs it took for us to operate the business. So starting with the first one, right, we need to figure out what our total sales are. So this is where I'm going to go to my adjusted trial balance, right? And I'm going to locate all of my sales. So right here, that's what I'm going to be doing. I need to take the main account of each and every single sales. Okay, so in this case, you do not treat these columns like debits and credits, okay? You treat them as if you are making a calculation. Okay, so in this case, I'm going to use the right side for my calculations here to give me my grand total sales here. Now, if I go ahead, so this is what I was mentioning, right? Instead of having to list out every single sales, right, item here, right? Since I have it under a main account right here, boom, I know that my total sales for the month of June gave me a grand total of $30,000 and 549 cents, okay? However, what were the things that counter my sales, right? What are the things that we created contra accounts for? Well, we had a sales returns and allowances, as well as a sales discount, right? Those things take away money from our profits for our sales, because those are things that we have discounted the price for, right? So these are going to subtract, right? They're going to make a negative number. So in this case, I had a returns and allowance for $19.95, and I had a sales discount for that $1,900, okay? So I'm selecting the blue numbers, okay? Make sure you do the same, okay? Because we're dealing with main accounts, not sub accounts. So let me see, I clicked, okay? And these are all negative. So this is going to give you your total sales, right? How much money did you actually earn overall together from sales? So I'm going to use my equal sum, or you can just add them all up together, right? Because in this case, I had a total of $30,000 worth of sales. However, I discounted by $1,900, and I had a sales discount for $1,996 here. So that's going to give me a total sales of $28,579.74. Okay. So that is that. Okay, so you took your total sales minus all your discounts minus all of your returns and allowances to give you your total of $28,000. Okay. Now, what does gross profit mean? Well, it's like your paycheck, right? You have a gross pay and a net pay, right? Gross means before your taxes, right? Or your full amount. Net is after taxes or after whatever it is, right? So in this case, what is going to equal my gross profit? Well, what is the amount that is directly correlated to your sales, right? In this case, we must take out our cost of goods sold and our cost of materials, right? Because those were things that contributed to your sales, okay? These are things that we have used in order for us to make our sales. So we need to have a cost of goods sold, and we're going to counter against my cost of materials. Okay. And in this case, instead of having your you listing out every single item here, we're just going to take the main account. So cost of goods sold, I had a cost of goods sold of $4,000, and I had a cost of materials for $1,041, okay? And this is going to give you your gross profit, okay? So this is also another sum, right? What you're going to do here is you're going to take your total sales, okay? All right? And you're going to subtract out your cost of goods sold and subtract your cost of materials, right? Because they are directly correlated to your sales. So in this case, my gross profit so far is $23,463.43. Okay, that's your gross profit. Now, what do I do with this number? This is not where you need to end, because you need to now see if the money that you generated, right? This is your gross profit, right? Does this amount cover every single expense it took for you to operate your business? So that means I need to list out all of my operating expenses, okay? All my operating expenses. So that means, what did it take me in order for me to generate all of this income, right? What was the cost of me doing business? Well, the first operating expense that you have incurred was your advertising expense, okay? And I'm going to use the left column here to just summarize all of my expenses here, my operating expenses. So in this case, I spent $185 to advertise for my business, okay? I also end up incurring some business expenses, right? I had to promote, or I had to contribute to the building of the designing of the store, but also I had a grand opening party to celebrate, right? Next one is going to be, we don't have any freight expense because we converted that. Next one is I had to pay insurance expense, of course, to protect my store for that $195. Okay. What else did I have to do? I had to have some labor costs, right? I had someone to design my store, but also hired someone to temporary work to do my grand opening for my store. Okay. I also had to incur license and permit expense, right? I had to pay that in order for us to be able to open up the store, right? I had to pay for the license of that. I also had to get rid of my furniture, right? And purchase new furniture. So in this case, I incurred a loss. of $2,000. Okay. I also end up using a bunch of office supplies, right? That's the next account, office supplies expense. Okay. I also end up using $70 worth of my office supplies. Okay. And of course, I also had to pay my employees through payroll. How much did I pay my employees in grand total? I spent a total of $1,500 and $4.74 for my workers. Okay. And let's see what's the next main account. Purchase expense, I did a conversion entry, so nothing there. Rent expense, right? I had to incur rent for $1,500, right? I had to pay the building in order for me to sell my coffee. I also had some travel expenses, right? To pay for the gas to deliver all of those sales to my customers, okay? And let's see, I also incurred again some depreciation expense, right? I had to use my machinery, right? And I also have my amortization expense, right? For that. So this is all of my operating expenses that I have occurred. And what I'm going to do is I'm going to equal sum. So give me a grand total here on the left side, because this is important that you need to know that this is part of the calculation, right? I need to know what my grand total amount of cost of my operating expenses were. Okay, so there you go. That was my grand total operations, right? So I spent a grand total of $10,301.17. Okay, and let's see, what else other income do I have here as well? Oh, put in the wrong column. Okay, so this is going to be total operating expenses, okay, was a total of $10,301, okay? All right? Okay. And let's see, was there any other income that I have generated apart from my sales? Well, we did have one thing that we charged our customers for, right? It was for the delivery charge. So this is considered other income because it wasn't my main core of operations isn't to deliver coffee, it is to sell coffee. So in this case, this is going to be considered other income. Okay, right? I charge my customers a fee to deliver these coffees to them. That's money that I'm pulling in separate from the cost. So in this case, that is what I need to include is any other income. And that other income is going to be referred as your delivery income. Which increased your income by $300. Okay, so then now you need to now calculate your net profit / net loss. So what this is going to be is it's going to be, you're going to take your gross profit, okay, of $23,000 right? You're going to subtract out your expenses of $10,301.17, and you're going to add that extra income in there, okay? And you should get a grand total profit of $13,462.26. So you had a profit, once again, of $23,462.26. Okay? So that's a huge, huge profit. Okay? So that means we did good by selling our coffee, right? We sold our coffee at the right price, right? We barely had any returns and allowances. And even with our discount of $1,900, right, we still made it out with $28,000 at the end of the day. Okay? And we also, again, only had $4,000 worth of cost of goods sold and $1,000 worth of business supplies that we used, right? Cost of materials to yield us a gross profit of $23,000. So $23,000 minus the $10,000 plus the $300, right, gave you a total gross profit of $13,462.26. Okay? So that is the income statement. Right? So now that I have my income statement completely done, the next one is that it has to go in a particular order, right? Next thing is to revalue or adjust your equity. In this case, equity, right, is the value of your business. Rule of thumb is if you are starting out your business, right, you should actually reinvest back into your company, right? Take the profits and reinvest into your company, because then you can start expanding your menu, right? Don't just offer regular coffee and supreme coffee. Maybe invest in different other coffees, right? Other things could be like, instead of having hot drinks, right, you could go explore cappuccinos, frappuccinos, right? Iced drinks, okay? So that is the importance of profits, is that yes, you could pocket all of it, right? Because this is $13,000 that maybe the owner feels that they deserve to be paid, right? However, you definitely don't want to put your business in a hole, because you also owe $6,000, $7,000 in debt, right? To a bunch of vendors that you should pay. So in this case, right, rule of thumb is when you are actually starting a business from the ground up, right, you generally want to actually reinvest into your company, because then you can expand your business, right? Do some more renovations, right? Invest money into another machine, right? You can do better off than taking the profits for yourself. So that's exactly what we're going to do here, okay? So the statement of owner's equity is going to adjust the value of your equity. We first need to know what was the value of your equity as of June 1st. Well, let's take a look. What was it in your adjusted trial balance? My equity right now is currently $30,000. Okay? All right? Anything that would influence is that if you do end up putting your profits and investing it into your company, then that's the first thing that's going to increase is your net income, right? And where do we get net income from? We just solved it in our income statement, okay? So you got that $13,462.26. I'm doing it on the left here because this is my calculations here. Okay? You can also do it on the right here, because at the end of the day, right, you're going to end up adding and subtracting everything anyways. So in this case, that is, I'm not going to do it on that side because I want you to see the change here. So again, my net profit, is currently at $13,000. Right? Now, other things that also influence your equity is going to be your owner's withdrawal, because we did take money away from the company, right? Because we invested the money originally and then the owner took away the money. So that's going to decrease the value because you're subtracting the money away from your company, right? You end up taking money away. So in this case, you took $3,000 $3,000 out from your company. So that means you need to adjust your equity, right? So this is a calculation right here. You need to adjust your equity by $10,000, right? Because again, you're doing your calculation here, right? If you have if you're investing in your company for $13,000, but you took $3,000 away from the company, that means you're going to increase your equity by $10,000. So that means your new equity is going to be, right? The difference is going to be giving you a total of $40,462.26. So that is your new equity. Okay? So we started out with $30,000, right? We added our profits or $13,000. We subtracted $3,000 for taking out owner's withdrawal. So now I'm at $40,000, and that is your equity. Okay? Now the most important thing about is solving for your new equity is now we can complete our balance sheet because we know what my owner's equity is, right? So total liabilities, okay? So that means I have owner's equity, right? And I just solved for it, and it was a total of 40, or from here, your equity statement of equity, it was for $40,462.26. Okay? So that is what is going to be next is we are going to solve for my accounting equation, right? I'm going to test the accounting equation by filling out my balance sheet. I already have one component from my balance sheet, right, which was the statement of owner's equity, which gave you an equity balance of $40,462. So that is a given because we solved it from our previous financial worksheet. Okay. So that means I need to go through every single account to give us a total of our assets and a total of our liabilities, okay? So let's go ahead and start with the very first section here because I need to figure out what my total assets are, okay? Now the great thing about doing this is, well, we do have all that information in my adjusted trial balance, right? And I have them all summed up in our main accounts. So the very first asset I have listed here is going to be my bank account. And right now, do not use the left and right column as debits and credits, right? You're going to use them as the left side is going to be all of your assets, while your right side is going to be your liabilities plus your equity. So in this case, that's exactly what I'm going to do. So right now, in my bank account, right, my total bank account, which includes my checking, petty cash, and your cash in the register, I have a total of $12,842.76. Okay? So let's see what my next main account is. And this is C. Now, when we look at our main accounts, right, it makes it that much more easier and it makes our statements look more cleaner, right? And it summarizes most of our accounts together, right? So that's exactly why I did that on intentionally to show you the difference between when you do your financial statements. Instead of having to type out every single item on the list, we have our main accounts, which gives us a summary of everything. So my accounts receivable is currently at $15,533. Okay, let's see what my next main account is. So my next asset is my business supplies, which is currently, right after making the adjustment, is currently at $509. Okay, so I'm only highlighting main accounts here. Next asset is my office supplies, right? I have $80. Right? After that, I have my inventory. Right? Which is currently at $540. Okay? Next asset I have here. So after inventory, I have furniture. This is the book value of my furniture. So that's what I want here is my book value of my furniture. My book value for my furniture is currently at $8,926. Okay. Next fixed asset I have here is my office equipment, which is right now currently at $2,767. Okay. Next I have on the list here is equipment, right? I still have equipment. My equipment is right now at $11,000. Okay. Next asset I have here is my vehicles. My vehicles is currently right now at 31, right? That's my book value. And then let's see what I have next. Next asset I have here is my prepaid accounts. Okay. At that 665417. Next asset I have, so I'm working on other assets here. I have deposits, okay, at $1,700. And last but not least, I have my goodwill, right? Nothing else, no more assets after that. I have my current goodwill at a book value of that $2,088.33. So these are all of my assets summed up together in my main accounts. And that's what I'm going to do is I'm going to tally up all of my totals here. Okay? So in this case, my total assets equal $81,543.97. Okay? And my job is I need to see if my total liabilities plus my equity of the $40,000 is going to be equal. So what I'm going to do here is I'm going to bring it down here so I can test my accounting equation, okay, which is my assets equaling my liabilities and my equity, okay? So I finished the first section, which is all of my assets. Next I'm going to do is I need to record all of my liabilities. So let's take a look here. My first liability I have here is my accounts payable, right? Which is outstanding at a grand total of $6,731. Okay. I have a Visa payable, outstanding at a total of $2,156. Okay. I have a notes payable. Okay. Outstanding at $649.49. Okay. I have a total payroll liabilities, right? If you remember, we collected the money but never paid the government. I have a grand total of $276.16 worth. Okay. My next liability. Okay, so after I do payroll liabilities, I have sales tax. Okay, currently outstanding at, right, I didn't make a payment to my state or county for $2,046. And last but not least, right, I have loans, right? I still have to pay off my truck loan, which is currently outstanding at $9,221. So in this case, let me rack up my total of my liabilities here. So right now, my total liabilities is $41,081.71. And since I already had my owner's equity here, I now need to add up my owner's equity plus my liabilities, right? That's the accounting equation. And I get $81,543.97. And guess what? It's even at $0, right? That means my accounting equation is done, right? I have an equal assets totaling up my liabilities and my equity. So that means if this pans out evenly, if you balanced out your sheets, right, you test the accounting equation, you are successful. That means you did your accounting completely correct this entire time. Okay, so there you go. I am matching at $0 balance difference between them. So I'm at a grand total assets of $81,543.97, equaling our total liabilities and equity of $81,543.97. And that's how I do my balance sheet, right? I just look at my adjusted trial balance and plug in what I need to plug in, right? My assets, my liabilities, and the equity I sold from my previous previous financial statement, which was the statement of owner's equity. Okay, so that means I have one last financial statement to complete, and that is the statement of cash flows. Now, the statement of cash flows, I'm going to let you guys know now. I am not going to test you on this just because this is one of the more difficult financial worksheets you will come across, okay? Because there's so many rules and so many things that you have to know about it. For the sake of this class, I'm just teaching it so then when you go move on into a company, right, you at least have an idea of what the statement of cash flows actually does, okay? Instead of saying, oh, I never learned it, right? In this case, that's what I'm going to be teaching you, but I'm not going to test you on being able to produce a statement of cash flows, okay? Because again, it is very difficult to understand. Now, the statement of cash flows, right? The entire time we were looking at our business, right, what we were actually doing was an accrual type of basis, right, where we paid money, we owed money, customers owed us money, and so on and so forth, right? So in this case, what I have to do is I am actually going to go from an accrual basis to a cash basis, because what I need to do is I need to understand one thing. How much cash is actually really flowing into my company and how much cash is actually flowing out from my company. That is the main goal of what the statement of cash flows does. It literally tracks where your actual money is going, right? But in this case, we need to do our calculations because we need to think about it. Do we have the cash or do we not have the cash? That's the most important thing here, Okay, so the first thing you need to do is, so it is a combination between the income statement and the balance sheet. However, this one, you do also need to include the unadjusted trial balance in order to complete this financial statement. Okay, so for the very first account that you're always going to recognize is your net income. So that's the first part right here, is my net income, right? Is right here, right? Right here, right? You can get it from the income statement, or you can also get it from your statement of owner's equity as well, right? This is just the title. Net income should be your very first column right here, or very first item on your list, okay? Because what we're going to do is we're taking a look at all of the income that you have generated for this, right? Because that's your main source of cash, right? That's the main source of you receiving cash. Now, this net income, right, we all know is all of your sales minus all of your expenses, right? What we don't know is that in this income, right, we didn't actually receive all of the money in cash, right? We allowed our customers to owe us money, right? They owe us a lot of money. So in this case, this net income is where we need to begin with, because this is going to be something that we have to subtract out things that we have not received cash for, right? Even though we did generate $13,000 worth of cash, that doesn't, our sales, right, income, right? But that doesn't mean we actually received all 13,000 of those in cash, right? Because a portion of those sales is generated through an accounts receivable, meaning we never received the cash in the first place. Okay, so 13,000 is where we need to start off, is our net income. Now, again, the statement of cash flows is broken into three categories, right? You have your operating activities, your your investing activities, and then your financing activities, okay? So each one is going to be separating your balance sheet into these specific columns, or specific categories here, right? So your operating activities is going to be your current assets, as well as your other assets, as well as your current liabilities, right? Because those are what you had to incur, right, in order to operate your business, okay? Your investing activities are going to be things that you invested into your company. So this is where your fixed assets are going to be placed, right? And your financing, right? Pretty straightforward. Financing. What did you do to finance your business? Well, if you took a loan, there you go. A long-term liability is going to be here. Did you add your own money into there? That's going to be, so your equity and your long-term liabilities are going to be what is financing your business. So that's why we're going to break up our balance sheet into specific details, right? But before we do that, right, there is a subsection that you absolutely need to know. We also need to add back the money that we never actually spent. We have to first figure out what our non-cash operations was. What was my non-cash transactions, okay? And that is going to be things like depreciation, right? Because in this case, did you actually spend money to represent that you use those machinery? No, right? You didn't pay $655 to use your equipment, right? Because you already paid to invest in those items. So this is something you are going to have to add back, because this is considered a non-cash operations, right? I never spent the money to begin with, right? It is something that is a part of the accrual process of, adjusting your values at for book value, right? So in this case, I never actually spent money to um to uh to in order for me to depreciate my assets. So that's something I have to add back into my net income because I never took it out in the first place, right? I never spent the money. And same thing with the amortization as well, because that once again is a non-cash operations too, right? It functions exactly like depreciation, right? Sorry, I keep going back into the wrong worksheet. There you go. Amortization for 1167. You have to add that back into your net income because you never spent it. You never spent that money in the first place. Okay? So then now we can go ahead and go into our balance sheet and go through each and every single asset, or in this case, current assets. Now your bank account is what you are trying to solve is the total money that you began with going to equal the total money that you have right now? So in this case, that is going to be an account I'm going to skip because this will show up on your statement of cash flows, but not right now. It's going to show up later, okay? But the first thing I have here is accounts receivable, right? Now, this is how we need to understand this, right? Accounts receivable, we know it means that our customer owes us money. Now, the question here is how we understand it in the statement of cash flows is, did we actually receive the money from these customers? In this case, no, we still have an account balance in my accounts receivable account, meaning I never received the money in the first place. So that means I actually need to subtract out this money because I never received it in the first place, right? This is part of my sales, right, that I have not received cash for. Okay, so that means I have to subtract this out from my net income because in this net income, right, I'm looking at how much cash I actually earned. In this case, these people never gave me the cash yet. They're still outstanding for that money. They haven't given it to me yet. So that means I need to subtract this out from my net income. Okay? Next thing on the list in my current assets is going to be business supplies. Okay? Now, business supplies, how do we understand this? Well, let's take a look. Okay, business supplies. Now, in this case, right, I already spent the money. Okay, when I have my cash, right, did I use my cash to buy these items? In this case, yes, I did. I spent money to buy business supplies. So I don't actually have this as part of my income, right? It's going to be subtracted out because I've already spent money to obtain these items, okay? I spent money to go ahead and buy your business supplies in order for me to generate income. So that means I've already incurred the expense, okay? So that's going to go the same as well as for your other current assets, right? Such as office supplies, right? I already purchased this in order for me to complete my sales. So therefore, I already spent the money in order for me to acquire the office supplies. Okay. Now, what about inventory? Okay, so inventory is my next item on the list here. Now, in this case, right, I currently have, what, $540 worth of inventory, right? Now, in this case, let's think about it this way. I still have the inventory on hand, meaning I've already spent the money to acquire the inventory. But at the same time I haven't sold any of those inventory items for me to generate my income. So therefore, I haven't sold it yet. That means I still have this cash. I haven't sold it for me to receive cash yet. So in this case, that's how you have to understand it, is that I already spent the money to buy the inventory and I haven't sold it yet. So therefore, I still have those, I don't have those items left as cash anymore because it's already been spent. I had to buy it in the first place in order for me to sell it, right? I haven't sold it yet. So therefore, that's going to tell me that I still have, that I haven't generated the money out of this income yet from these inventory items. So therefore, I need to subtract it out from my income because I had to buy the equipment first, right? In order and I haven't sold it yet, okay? And let's see what's next, right? Again, furniture, office equipment, vehicles, those are all fixed assets. So that means that's going to be for my investing activities. Okay. I had some prepaid accounts. So in this case, I also, right, I already spent the money to begin with in the very beginning for me to purchase my insurance, to purchase my rent expense, right? In this case, I actually already spent the money, right? I already bought it. I paid with a check to begin with. So in this case, I don't have the money anymore. So therefore, that is going to be subtracted out because this is money I don't have anymore. Okay? And of course, that's also going to go the same as well as your deposits. Okay, because you already spent the money to begin with, right? The rent deposit as well as the water deposits. You already spent the cash in the very beginning of the month, so you already took that money out away from your operations. Okay. Now, last but not least, on my on my assets list, right? I have goodwill. Right now, because of goodwill, right? As I can see up here, I've already added back that $11.67, meaning I already added back that cost that I took out to begin with in the very beginning of my operations, right? That was the one thing I calculated at the end of the month. I ended up taking out that amortization. So in this case, right, since I'm adding it back in there, that means the value of my goodwill is also going to be what it historically cost me. So in this case, that's where I need to go to my unadjusted trial balance to find out what was my total value of my goodwill to begin with. In this case, it was $2,100, okay? That's something you need to know. Now, in this case, because I already purchased it, I paid with cash to buy, right, my the business name, right? I purchased a pre-existing business, so I've already spent the cash of $2,100 in order for me to buy my business, okay? So these are all things that you're going to subtract out from your net income, okay? Now, that's just only my assets. I also have to include my current liabilities. So let's take a look at my balance sheet once again. Let's take a look at what my current liabilities are. My current liabilities are my accounts payable, my Visa payable, notes payable, sales tax, or payroll expenses, sales tax, and loans, okay? So I can list them all out right now. So that's exactly what I'm going to do. So we can save some time here. I have my accounts payable, Visa payable, notes payable. I have my payroll taxes, okay, as was my sales tax, as well as my loans. Now, how we to understand this is, well, okay, starting with my accounts payable, right? I currently owe $6,731.09. I owe that amount. Did I actually pay for that amount? No. I owe it for a reason, meaning I haven't spent the money to pay for these items yet because I currently still outstandingly owe it. I haven't paid it yet. So that means that's going to add back into my net income because I didn't pay them off. So that means that's cash I actually have in my hands, right? Because I may owe it, but I didn't pay for it yet. So that means if I haven't spent the money, that means I still have this money left in my bank account. And that means all of your current liabilities, right? You haven't paid them yet. So that means you're going to add all these values back into your net income, okay? So again, I didn't pay my credit card, right? I didn't pay for my notes payable, okay? Right? I didn't even pay for my payroll liabilities, right? I still owe the government money. I owe them $276, right? I haven't paid the city or local agency yet for the $2,000 for the sales tax I've collected. And for sure, I have not even paid a dime to my loans. Okay? So therefore, that's going to be considered things that are going to be added back because I still have this money available, okay? Now, in this case, you can equal sum it here, okay? Okay, so this is going to be my total operating activities. So that's what I'm going to do. I'm going to do equal sum so I can quickly calculate how much money how much money have I used during operations, okay? So this is, I'm only going to tally up this column right here, right? I haven't included my net income yet because that's going to be your net, right? So in this case, I have a total operating activities to be $28,632.55. So therefore, I need to net my operating activities. So that means I'm going to add these two values together. Okay? Because right now I have a positive number. That means I'm going to add these numbers together. Right? If I had a negative number, then you straightforward, right? You would subtract it. Okay, but in this case, I end up having a positive outcome. So therefore, I'm going to add this amount into my net income, right? And that's going to give me a grand total of $42,000, right? Net, meaning you're going to subtract out, or in this case, the difference between them. But in this case, I came up with a positive number. Therefore, I'm going to add this back to my net income. So that right now, my net after operating activities, the net I have now is $42,094.81. Okay? So now I need to go into my fixed assets area, right? What did I invest into my company? Well, I invested in some furniture, right? I also invested in some office equipment. I also invested in some equipment itself, and I also invested in my vehicles, right? Those are things that I invested into the company for. These are my fixed assets. So I got furniture, office equipment, and some vehicles. So these are investing activities. Now, when I invest money into a company, what am I doing? I'm spending money, right? That's what it takes to invest into my company, right? I purchased furniture. So is that cash I actually have on hand? No, I spent it in order to invest into my company, right? I bought these equipments, these items for me to operate the rest of my business. So that means this is money that I have spent. So in this case, right, let's take a look at my balance sheet, right? These are all of the book values that are currently right now in my company. These are the book values. I did not spend $8,000 on my furniture, right? So this is where I have to go back into looking at my historical costs and going to my unadjusted trial balance to determine what was the true value. How much did I actually spend on making my purchases of furniture? Okay? In this case, right, that included the previous one, the on your balance sheet included taking out the cost of depreciation. In this case, I'm not looking at what my book value is. I'm looking at what I originally purchased it for, my historical cost value. So in this case, let's take a look. I originally purchased a grand total of $9,033.75 worth of furniture. But in this case, that was money that I spent. So that means I need to subtract it out of my my cash flows, right? I don't have that money anymore. I spent it to buy furniture. So that means all my fixed assets, right, are going to be things that I have spent money for. So in this case, I spent a grand total of $2,863 for my office equipment. Okay, so this is unadjusted, so I'm looking at what I actually paid for it for. My equipment was another $12,000 that I spent. Okay, and including the equipment was $12,000. And then last but not least, my vehicles, it cost me $32,000. Okay, so right here, this is where I need to figure out what my total investing activities are. Okay, so in this case, equals sum. So my total investing activities gave me a grand total of $56,000. So therefore, what is my net? My net's going to be whatever I found my net operating, right? The leftover money. But because I end up spending so much money, right? This is a negative number. I do need to subtract this out. So that's going to give me a negative $14,157.24. Because this is all the money I spent in order to invest into my business. So now I'm at a negative number in grand total. Okay. All right. Last but not least is going to be financing activities. So what are things that increased the value of your company, right? Or in this case, so equity, but also things like loans, right? That is what you took out a loan in order for you to finance your company, right? So in this case, my only long-term liability I have is a loan, okay? And that means I gain money, right? I gained money for this loan, right? I gained money for this loan. So therefore, when I borrowed money, that means I had a positive $29,221. Okay? Right? And then I also, let's see what else increased the value. Okay? What also increased the value of my company? Well, I had to start my company somewhere, right? I invested originally into my company, which was my owner's equity, right? I had $30,000 to begin with. So in this case, I need to go to my unadjusted trial balance, because this is going to give you what your equity was in the beginning, right? What was my original investment? In this case, I invested money into the company. Okay, where is it? Sorry. I invested money into the company, right? I invested with my owner's equity for $30,000. So that means that's $30,000 that I originally had to begin with in my company. Okay? $30,000. Okay? And then what were things that you also took out from your company, right? An owner's withdrawal would also affect financing your company because you end up financing yourself, right? You end up hurting the business by taking away money. So in this case, right, we need to also record the owner's withdrawal, okay, which took away money, right? Because that was cash that you took out, to be a total of $3,000. Okay. So therefore, let's see, what is my total financing activities? It gave me a total of $56,000 and $221.90. Okay, that was the total financing. So now I need to add this to my net here to get me my new grand total. Okay, of $42,064.66. Okay. All right. So then now we need to look at how much money did I begin my bank with, right? As of June 1st, I had $0. Okay. However, what is my ending balance? So this is where I need to test this, okay? If I started out with 0 and I had this much amount here, right? My net operating, since I started out with my company, right? This should be equal to this amount that I have in my checking, in my balance sheet, right? My count, this right here. This is the number you're supposed to be ending with, okay? Is $12,000. Okay, so let's see. Okay, so your statement of, so what you're supposed to do here is that when you do, okay, so I added, my bad. Okay, so it's supposed to be this plus this. Yeah, it gives you 42. Wait, why is this so much? Okay, so in this case, right, this is what you should be, this is the net financing, right? You got $42,000. That means for this, right, what did you begin your cash flow with? You had 0. So it's supposed to be the difference between here is supposed to equal the number that you have on your balance sheet. So in this case, I spent a little more money on something. Okay. All right. So that's why this is one of the more difficult worksheets to deal with, just because this number has to match your balance sheet cash flows right here of the 12,000, which in this case I did not get even. Okay, so it is very difficult to understand once again. So I do not expect you to know this or expect you to be able to compute this. Okay. But that is my end result here, that my difference is supposed to be even. So I am I am right now at a 29. Oh, did I not put my loan in there? Huh. Let me see. I did put my loan in there. I'm off by $2,221.90. When you receive a loan, you should be getting cash. Did I not include? I did include that. Okay, so I'm off by 29,000 here. So let me see if I take that off my loan, what would happen? Then I'll be at 20,000. Okay, so in this case, what you could also do too is that, well, in this case, you're supposed to record the loan here for the $221.90. Okay, let me see if I take out the equity. No. Huh. So that's why in this case, sometimes it is difficult to be able to do this. In this case, it identifies that the loan I don't know why the loan shouldn't be there. It's off by that much amount. But I don't know. It's supposed to be there, so I don't know why this amount is not reflecting or calculating correctly. But there you go. You know what the difference is. It's supposed to be that two. It's this number is supposed to be 12,842.76. So we just have to figure out why this amount is off by so much. Okay. But we know it's off by the 29,221.90. Once again, that's not the point. In this case, I can't figure out why this calculation is not correct, but at least we know what the difference is. It's the difference is that loan right there, which is correct, right? When you get a loan, that means you got money. You increased your finances, right? And of course, you got this as well. So I'm not quite sure why this is incorrect. Okay. But other than that, there you go. You should get the total of that $12,842.76, which should match your balance on your bank account for that. And that's how you do the statement of cash flows. Okay. All right. Let's stop here. Go ahead and take your 25-minute break. I'm sorry, not 25-minute. Your 15-minute break.